Hey guys, I'm Big Mike, and like always, I'd like to thank you for being here today. Today we welcome back Morad, better known as FuturesTrader71, for another webinar presentation. This time he's going to be talking about the impact and performance of a professional trading environment. This webinar is part of BMT's 5-year anniversary, and as such, we're going to be giving away 10 autographed copies of a book that Morad selected, which is Switch: How to Change Things When Change is Hard by Chip Heath. So what we're going to do is ask you guys to pay close attention to everything that FT talks about today, and at the end of the webinar, we're going to have a bit of a quiz, and we will pick 10 winners from that quiz and get you guys those autographed books. Some of the bullet points covered today include why care about your trading environment, a trader's perception of the markets in different environments, your environment and your habits, trading as a team, communications, distractions, and lost opportunities, size does matter, and the minimum office setup requirements for serious traders. As always, this webinar is being recorded. I'll post the recording on YouTube sometime tomorrow. If you guys are watching the recording at a later date, do me a favor and give us a thumbs up if you like it. As you guys have questions, you can go ahead and type them into the questions box. And in just 1 second, I'm going to turn things over to FT, and I'll ask FT what he wants to do with the questions. Do you want to take them as they come, or do you have like a set stopping point for those questions? All right, and I've just given you control.
All right.
So FT, do you want to take questions as they come, or do you want to hold them until the end? What do you want to do?
Yeah, let's do a quiz at the end, just so that everybody has an equal chance of answering them.
Okay.
I think that's probably what's best. Let me set a few things up here. All right, you should be able to see my screen. So let me start by announcing the risk disclaimer. It's required of me to do that for regulatory purposes. Trading futures options on futures and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. So I'm going to talk about basically a trader's trading environment. I've done quite a few webinars for Big Mike Trading. I'm always pleased when I'm asked to come back and talk because I feel that the crowd that comes into these webinars is very serious about trading, and it's a better investment of my time. Now, I've done talks about market profiling, about trading performance, statistics, and solve problems on webinars with homework and research and all that stuff. But this topic here is really important because it kind of falls together with everything else. Your trading environment is very, very important, and we'll discuss that. The topic here is impact and performance of a professional trading environment. Let's get going on that. So first we have to answer the question, why care about your trading environment? And I'm going to start off by with an example just to say, imagine a situation where you have the ideal trading plan, the ideal market conditions for that plan, and the freedom to execute it. If you have those elements, how likely is it that you will succeed? I would say very, very likely, right? In most instances, if all the pieces fall together, which is the assumption here. Now imagine that this ideal situation happens to take place in the corner of the kitchen at your local watering hole, a local bar, a local pub, auberge, whatever. How will that performance be impacted? So as a contrast, you can see that having the ideal everything, market conditions, trading plan, the ability to execute is great, but put in the wrong environment, put in a noisy environment or an environment where you're constantly interrupted, distracted. For example, you have a full-time job or you're constantly being called on to do something. Let's say you run a packaging or shipping store like FedEx, Kinko's, or something like that, and then you're a manager who's just constantly being called up front to solve or to do things. Your trading environment's going to be very poor, and so your overall performance is going to be impacted. Your trading environment's another key element that has a direct influence, in our opinion, in the outcome of your effort as a trader. It is so for trading as it is for athletics or anything done professionally. So this does not only apply to trading. This is how it is for pretty much everything you do on a high performance or professional basis. Ultimately, you are your habits. Your habits are often governed by your environment. Your environment is as important as your capitalization, risk plan, product selection, trading plan, execution as far as performance is concerned. So, you know, you could be the most creative and most innovative art director in the world. Somebody who works, if you've ever watched the show Mad Men, somebody who works in a creative department and comes up with fantastic ideas for advertising or whatever. But if you're in an environment where you hate your boss or you hate your coworkers or it's noisy or your desk happens to be in the hallway, a busy hallway, then your ability to be creative or to perform or to focus is completely and severely impacted. And this is really important. Now, why do we care about this? In an AMA, Ask Me Anything with Big Mike a couple months ago, somebody brought up the issue of balancing trading with working. You know, somebody's at work, brings their laptop to work and tries to watch and trade the markets. That environment's very common in the online business, where people want to keep their day job, but they also want to trade. And I can tell you that that's a very difficult way to do this, because trading requires a constant pulse, a constant hand on what is happening in the market from moment to moment during your execution hours. And so it brought up the idea of having this topic. A trader's perception of the market in different environments. So in order to look at what this is all about, now a little bit of background for those who don't know me. I came into trading from an engineering environment, construction management. I was a project manager for a major contractor here in the U.S. doing very large projects, subways, tunnels, major bridges, very heavy construction. It required a lot of long hours and focus and so on and so forth. Didn't like it, loved it at the beginning, didn't like it at the end. So I ran into someone who was a professional scalper and became a day trader, a SOS bandit in Florida. So my introduction or my stepping into trading was done at a professional level. I was always in a prop environment until I stopped doing prop for myself. I went from being a prop trader in stocks and equities, mainly NASDAQ stocks, to trading futures at a prop shop here in Chicago. I moved from Florida to Chicago in the dead of winter in January. For the purpose of pursuing trading at a prop level. Prop is when you are hired by someone to trade their money full-time. You're a full-time employee under contract, usually 2 to 3 years, and you trade someone else's money, and you get paid a portion of your whatever you earn, or you're debited and have to pay back a portion of your losses. So that's what prop is. So I came into prop and have been with prop. I went from being a prop trader to a prop shop owner to trading for myself and hiring and backing people. So this is my background. And then in 2009, I came on Twitter and I started to get exposed to the online trading environment. And I started to see that this is a completely different world that exists out there and has existed for a long time, and started to interact in that world by just talking about what I was doing and how I viewed things and so on. And from that I got a strong Twitter following and have been doing the same for a while. and now I'm running a brokerage, a specialized brokerage that is running as a prop, almost like a prop shop for its clients, and part of the purpose is to educate and kind of create an environment that is the focus of this presentation. So let's look at the different trading environments. Okay, the first trading environment is prop trading. Okay, proprietary trading. That's what it stands for. Again, that is when you're hired by someone, by a firm, to trade their accounts with their money. They put up the money, the risk capital. They control your risk. They give you the desk space, the computers, and everything else. Your job is to trade and follow their plan, and then what you get to keep a portion of whatever you make as part of your profits. Usually there's a progressive scale. As you make more money, you get to take home more money. That's what prop is. So let's talk about these environments real quick. This is a very important part of this presentation. You might want to pay attention. So this trading in a prop environment is the ideal environment to develop as a trader. In this environment, the key element necessary to perform at a peak level, are already handled by the proprietors of this environment. So as a prop shop owner, it was my job to buy the computers, make sure the network is running a tip-top shape, that everything is backed up as required, that there's a risk system in place, that there's risk monitoring, that there's enough funding in the prop account, that the proper account information is segregated. Each account is segregated, and we can keep track of everybody's performance. All of that stuff is taken care of because it's in the shop's best interest to make sure that your environment is as squeaky clean and as efficient as possible. So you don't have to worry about any of that. Connectivity, all that stuff. My prop shop ran right here at the Chicago Board of Trade building where I'm talking to you from right now. Also, having one of the key elements of that trading environment is having other traders in the vicinity who are focused, and especially those who are achieving results. And that has a tendency to accelerate your performance. So let's imagine that you go on a holiday, you go on a vacation to Hawaii, and you happen to walk up to a beach where there are a bunch of surfers, and you see how amazing it is to catch a good pipe and surf your way out. These guys have been doing it since the day they could stand, and it just looks like a lot of fun. So you go back home where you happen to come from, which may be someplace in the UK, or even worse, Geneva, Switzerland, where you're landlocked except for lakes. And so now imagine the environment that you're in versus somebody who's in Australia or is in Hawaii and is among professional surfers or people who don't do anything, who live, breathe, and die with a surfboard, versus someone who has this as a passion and is doing so in a remote environment and does not have that same capacity. That's the key thing that prop trading does. It puts you in an environment where you cannot escape. You cannot escape the performance of others. I'll give you an example. So I was learning to trade futures. I traded the Dow as a member firm, as a prop trader, and I would click along with one lots, and maybe if I got really bold, a two lot here and there, and I would be ecstatic if I finished a day up $100 or $200. This is the very, very beginning of my trading career in futures. And you know, I thought I was doing great. I've got the thing cracked, and everyone, you know, I'd lose money pretty consistently, but every once in a while I would finish the day up $100 or so, $70, $100, and I would think, man, I am great. That was all fine and good until I found out that the more seasoned traders in the room were making a whole heck of a lot more money. They would come in, they were very intense, very focused. You didn't hear them talk at all, and this is why it took me probably a month and a half to find out what really was happening in this prop room. And there were days where you would hear that somebody has had an all-time high in their account, in their trading performance, and I would think, well, an all-time high, what is that, $300–400? And it turns out it's tens of thousands of dollars. Okay, past performance is not indicative of future results, of course, and I'm not saying that that performance can be replicated by that trader at this time, but that's how it was. Sorry about that risk alert. And so with that, within that environment, it just changed everything for me. I started to recognize that I was way, way, way behind my game in that environment. I just, what I thought was a good performance and I was getting praises for by the other guys who were just starting out, my friends at the time, was really nothing. And that was the push for me. How is it that this person can get in there, trade the DAX or whatever, and within the span of a couple of hours be up, you know, anywhere between $8,000 to $20,000 and then just be done for the day and leave. So that's one of the key elements. So I'm going to list for you the upsides and the downsides for prop trading. Okay, and I'm going to do that for pretty much every environment. You want to pay attention to these because you're going to be asked about these later. So one of the key elements, of course, is the performance aspect, seeing what other traders are doing. You get high buying power when you're trading for a prop shop, a lot of leverage. You get risk control. In other words, you cannot violate your risk parameters for the day because someone else, a risk manager, is handling that. You will not be able to waste 30% of your account on one trade because you felt like you could be stubborn, whereas as an online retail trader, it's your account. Nobody's going to stop you until there's a margin call. Good infrastructure is another key upside. Trading as part of a team was a huge upside. Seeing what other team members were doing, being able to stand behind someone who you know is doing well and watch what they're doing, even though you can't talk to them, just watching them do what they do tells you that this can be done, that this is real, that it is not a pipe dream. This is very, very important for your morale. And then being able to discuss with others what they are doing because you are part of the same prop shop and you are part of the same team. The downside to being at a prop shop is the lack of autonomy. Okay? By that I mean you can't do what you want. You're an employee. You can't decide not to come in today and trade because you're being paid to come in and trade. Giving away half or more of your profits to the prop shop. The prop shop's not there as a charity. It's there to make money. So generally, prop deals are 50% or higher to start that you have to pay to the firm for taking the risk, for putting up the money and all that stuff. And then you lack of freedom of your time. So, well, lack of freedom, the lack of autonomy really has more to do with your ability to do whatever you want. In other words, if you decide to change products, one day you're trading the Dow and you decide I want to trade mini crude or the full crude or whatever. You don't have the ability to do that. You have to have approval and there's a process for it. And then the last downside that I mentioned is lack of freedom with your time. You can't leave whenever you want. You can't decide not to trade. You can't go on vacation whenever you want. It's your time is owned by someone else. Let's move on to the second category, retail alone. This is basically meaning you're trading alone as an online trader. And this environment lends itself to be to really the outcome of this environment is a direct result of you as an individual having the right character and discipline to trade the way you need to trade in order to get results. So this is a tough environment to be in. This is like learning to perform surgery through trial and error or by reading books and so forth. It's not impossible, but it's not the ideal environment. Trading alone means that you're only accountable to yourself, which is not a good thing for most people. Again, a discipline issue. When you do things wrong, or you violate your plan, or you violate what you said you do, there's nobody else that you have to be accountable to, and we tend to make excuses for ourselves to violate our rules. This is an important environmental issue for online traders. There's no frame of reference. That's another issue or downside to trading alone. In other words, you don't know how well you're doing. You have no concept of where you should be or where you could be at that point in time. You have nobody else to use as a frame of reference for what you're doing. And so you're self-referring. In other words, you're only accountable to yourself, and because you haven't done this in a professional environment or professionally, that environment's not something that you can measure yourself by. There's no way to measure whether or not what you're doing is working or not working, since you're self-referring. Only a small group of individuals would thrive in trading in this environment, in my opinion, and as far as I can see, as someone who's a principal and watches risk for stage 5 trading, I can tell you that very few people can go on their own and actually do what they're required to do to keep their discipline, and who do have the right character to do this alone. Okay? The key downside, there's no frame of reference. It depends heavily on your character and discipline. The key upsides, complete autonomy, complete freedom, and the ability to add or take away from what you're doing at any given time. Okay. The next group is retail online trading in a public forum or club. This is the second most ideal scenario behind prop trading. Okay. In this environment, you have what looks like a prop group, but without the benefit of accountability. So you're within a group of people. You're within a group of people. And you're communicating with each other. You're a committed group of people, and we'll talk about what kind of people you need to look for to do this. Within what I'm doing right now, we encourage people through our chat room and so forth to find a trading buddy to be accountable to, and so on. And this is the next best thing to trading in a prop environment. It is key in this environment that at least one individual knows where their group should be headed, and that the individuals in it are honest, are striving after the same results, and are committed to the group. Key downside to this, character and compatibilities. You hook up with people online that seem like they're walking the same path as you, but the egos get in the way, or there are incompatibilities to their approach or time frame or whatever, and then you find that you've wasted a bunch of time with a person or a group of people that doesn't really provide anything for your trading. You can find this out fairly early by basically asking questions. Also, the other downside to trading in a private group is the amount of noise within that group. You'll have some people who are extra bored or whatever, and just are constantly joking or doing things that distract from that environment. This type of group is even better when you share an office. So when I first started trading as a SOS bandit, I actually put up the money myself, and I was in an office with a group of guys who basically traded their own accounts for themselves. And in this environment, we shared an office, so we were away from home. You were in an environment that's very close to prop trading, but it was your own money, and I think that's fairly ideal. Again, prop is the best environment for this. The next group is a retail in a public forum or club. This is a hit or miss scenario. This is where services like Big Mike Trading come into play. Big Mike's a little bit different than others that I've interacted in, who shall remain nameless, in that it seems like Big Mike's the most followed of Big Mike's members are very, very serious about trading. I've looked at journals that have been really outstanding And this is what Big Mike is offering as a service. It's a public forum or club that you're a part of. Another outlet that I participate in is called daytradingradio.com, where a lot of stock discussion and so forth goes on, and it's generally there's an entertainment aspect to it, but there's a lot that's shared in there that is helpful to traders, especially those who trade stocks. The quality of this environment is highly dependent on knowing who to pay attention to and who to ignore. It is an environment rich with ideas and effort, so those are the key upsides, but it can quickly degrade to egotism and an incredible waste of our most valuable resource, which is time. That's the key downside, is you could waste a whole heck of a lot of time in the wrong group. So you have to go through a bunch of groups to find your home. The next trader that I've come across, or the trading environment that I've come across, is the online retail environment on Twitter. So Twitter is essentially the same thing as a public forum, but Twitter is interesting in that the great thing about Twitter is that a trader can be very specific about whose information they see. So you're actually subscribing to someone's feed. Twitter is a key medium for trading, in my opinion. However, it's an environment where a trader can put his or her faith in someone based on the little information you get from Twitter itself. So you have to invest a lot of time in Twitter, following someone and looking at what they're doing and what they're typing in and what they're tweeting out in order to figure out if they're worth looking at. That is assuming that you know what to look for. With the description of this person that you're following being so limited, if you look at my Twitter profile, it doesn't say very much about my background, why you should listen to me or you should ignore me. And that's how everybody is, but everybody behind 140 characters seems like an expert. So this is the main downside to Twitter, is that there are hundreds and hundreds and millions of people to follow, and it's just, again, you're spending a lot of time, you're wasting a lot of time figuring out who to follow and who not to. But it's a great environment to get ideas, to have continuing growth and continuing education in your trading. But it requires a heavy dose of discernment. Discernment means the ability to judge and be able to tell the difference between what's good and what's bad. The impact of experience. So I'm going to finish this off, this portion of the talk off here by saying the impact of experience cannot be measured. Cannot be measured. It is difficult to generate the right kind of environment for yourself when you've never experienced that environment. How do you know what it's like, what your environment should be like when you've never been in a professional trading environment? When those people taking the opposite side of your trade are just numbers on the screen. This is a particular challenge for independent traders. Again, this is why I've come online, and this is what I'm striving to change. I'm creating a structured trading environment where the focus is the market and being a part of a community. It's very important as human beings for us to operate in a pack if we can, but having the judgment to be able to, or having the experience and the ability to discern whether or not when to be there, when not to be there, what to listen to, and what to ignore. Okay? Your environment, your habits. So I'm not going to get into habits very much here. I know this is something in last year's the 4th annual Big Mike series that he did. The book I recommended last year and signed that was part of the giveaway was The Power of Habit. I talked a lot about that book. It's very important. This year's book that's being given away by Big Mike is called Switch. It addresses the same topic, these are the key things that I feel people should focus on at the moment. Yes, it's great that you can read another candlestick book. It's awesome to read Market Wizards for inspiration. It's great to read a price action book or an order flow book or an order flow blog, but really the key element, if you are efficiently using your time and developing yourself as a trader, the key thing you have to work on is yourself. I know it sounds like a cliche, but it is the God's honest truth that your ability to modify, to control, modify, and change your habits and environment is so key for your development that it's worth talking to me for me to talk about it for an hour or more. It's your habits. The sum total of your habits are who you are. This is who you are. When you look at a person, really you're looking at the sum total of their habits. If their habits are poor and do not support the activity that they're seeking to excel in, then they're not going to excel. Okay? It's just that simple. There are some great books on this. Again, The Power of Habits by, I think, Duhigg, and Switch, which is the book that Mike's giving away today. So make sure you answer the questions right so you can get your signed copy. How serious are you about being a professional trader or investor? You know, are you afraid of commitment? This is something you need to figure out right now. If you are not willing to put everything you've got as far as effort, focus, discipline, habit forming, all of that into this, then you're basically wasting time until you decide to do it or you quit, whichever comes first. So if you have a problem with commitment, if you're afraid of commitment, maybe it's time for you to stop and think about how much you're committing to this and what it means to you before you move forward, because it does. Trading breaks you down to the cellular level because there's no escaping the results and the outcome of your actions. Every action, you cannot talk your way out of a late assignment in trading. You cannot convince your boss that something went wrong and it wasn't your fault. Trading is red or green. You're either getting results or you're not. There's no escaping what you're doing. If you think you can sneak away with a scalp trade when scalping is not part of your plan here and there, it might pay off in the short term, but in the long term it's likely to kick you right where it hurts. So you have to make a commitment to what you're trying to do here, not trying to do, but what you want to do here, and then once you have a commitment, it's a matter of sitting down and actually devising a plan for what steps you need to do it, and then doing it. So there are a lot of people who know what they should do or what they have to do, but they just don't do it. They just don't do it. They complain that not enough is being done for them, not enough is being offered in order for them to reach their goals. Some key habits, okay? Pay attention here. Some key habits you have to consider becoming great at as part of your pursuit. These are things that you should become great at as part of your pursuit to be a trader. The first one is being supremely patient. The ability to act when the predefined probability shows up in your favor. So key, okay? So you need an environment that sustains that. You can't be someone who is forced or needing to act all the time. Understand that losses are part of the game. Stay resilient and steadfast to your risk management and homework. Operate from a centered frame of mind. Okay? Another key habit and environmental aspect to your trading. Having a centered frame of mind means you're constantly operating from a calm and detached. Detached does not mean not caring. Detached means you see what's happening, but you don't feel the urge to react emotionally to it. Very hard to do, but this is a skill that is so key to not only trading, but to life in general. It's great for golfing. It's great for whatever you do. Exercise and meditation are incredibly key to this. I cannot overemphasize this. I meditate, been meditating forever, and my traders had to learn to meditate in order to, as part of their agreement, to be backed. Very key. Also, exercise. The effects of exercise on the mind are outstanding. I suggest you take a look at a book called Spark that someone recommended to me that I'm in the middle of, that I'm almost done reading. Super, very, very important advances in the study of how exercise affects people's ability to concentrate and perform on a mental level, especially those with ADD, ADHD, that sort of stuff. Articles as recently as last week on Bloomberg highlighted the importance of meditation as a habit and environment. Some of the greatest minds in our business are meditators. Okay, do a search on Bloomberg for the word meditation, and you'll see the article. It's very impressive, and it's something that I've known and experienced now for almost 15 years. Trade your account size, not your dreams. That's another key habit. Sizing, position sizing is key. Understand position sizing. Understand risk reward. Distractions lead to errors. Errors are to traders as shoplifting is to retail companies. Errors tend to sneak up, but they quickly add up and cost you a lot unless you take action to stop errors from happening. And then the last one I have as far as a key habit to watch out for, consistently tracking your performance by journaling, reviewing, and adjusting what you do. Everybody knows that. Everybody talks about it, but very few people do it well. I hated my first boss. I could not stand the guy. He was a jerk. I was wanting to be a project manager. I was an engineer, and one day I decided to confront him and tell him that the way he was treating me was not equitable. I was just out of college and felt that he could be softer since I didn't know what I was doing. And his answer to me impacted how I operated as a professional and throughout my career to this day. His answer was, when you came in for your interview, you said you wanted to be a project manager. And he said, damn it, then you better start thinking like one and acting like one, because that's the only way you will be one. Okay? So his point is, you can't strive to be something but not move towards it, not think as that something is. So if you're striving to be a trader that is consistent, that is able to sustain a decent lifestyle by doing this, then you need to act like one. Your habits and your environment need to be that. If that means you get up in the morning because you think that traders should wear a suit to work, then wear a suit to work. But you have to take on the actions and the thinking of that thing which you wish to occupy for your career. And I've got to tell you that as a result of that, I was the youngest employee of a company that's been around for 113 years at my level, at my job level. That's how much that conversation propelled me forward. In order for me to move up, I found out that in order for me to move up and achieve the next thing, I basically had to take over my supervisor's role and act and think like my supervisor. And that made it very easy for my supervisor to move on and for me to move into his or her position. Same thing in trading. Your environment needs to be that which you strive for. Your thinking needs to be that which you strive for. Very, very important. This is not theory, folks. I'm talking from the level of experience, and it's very important to recognize that this is all part of the game. Trading as a team. So I'm going to run through this real quick, some important information here. The importance of having a like-minded trading partner. Birds of a feather. Okay, it's great that you found someone that you enjoy spending time with on Skype or online or some chat software, TeamSpeak, Ventrilo, whatever. And you're able to communicate with this person and tell them how passionate you are about trading and so on. But you have to find somebody who's like-minded. What is a like-minded partner, trading partner? If you don't have one, you might want to find one. They need to trade in your time frame. They need to be just as serious and committed about trading what you trade. They need to trade the same product, preferably. They need to trade the same hours as you, and there are many that are. And most of all, they need to have those key, they need to be striving to maintain those key habits that I mentioned earlier. Again, I'll repeat them. Supreme patience, understanding that losses are part of the game, operating from a centered frame of mind. Imagine having a trading partner who's yelling into the microphone and cussing at the market all day long. Trading your account size, not your dreams, so staying humble and trading at your level. Cutting distractions and errors in your trading is a goal, and consistently tracking your performance, reviewing and adjusting your plan. Okay. How does one become accountable for a faceless stranger? It's like if you've never met this person but you've heard their voice, how do you become accountable to them? The way you become accountable to that person is that you align your goals with theirs, and you essentially have to get to a point where you're making the same commitment to them as they are to you. So you're basically making a promise to each other to move forward with the same goals in mind. Accountability is so important in trading, because without accountability, time flies by, and there isn't a result that is a part of the outcome of that time. So becoming accountable to a faceless stranger is it's very difficult to do. It's an unnatural thing to do. But given the environment that we're in, given the technologies that we have access to, there are webcams, there are you can be online with someone for hours and hours. The faceless stranger, their face doesn't matter anymore. You start to learn about someone at their core just by interacting with them on a day-to-day basis. Is this a situation of the blind leading the blind? Okay, and it is. If you're working with someone at your level of competence, at your stage of competence, then how do you know that you're both going in the right direction? And for that, I would suggest, again, referring back to folks like Mike on Big Mike, who offer all kinds of advice all day long. There are many people who are out there, offering whatever advice they have. Learning from other people's mistakes cuts your learning curve quite a bit, but only if you take their advice to heart. This is a very, very difficult aspect of online trading. Who do I listen to? And are we all just leading each other into the darkness type of thing? So mentoring, coaching, there are a lot of services like that, but to be honest with you, I have not come across one that I would feel comfortable recommending. I only recommend those things that I use or believe in, and I've just not come across anything like that yet. So this is a very challenging part of this of this issue of having the right trading environment. Ensure that your team operates on the same values. So it's very important to have the same values as the members of your team. Honesty. I'm going to name some values. It's going to be important for you to remember some of these. Honesty, okay? Being able to just say it like it is, whether it's you to yourself or you to the person that you're interacting with as part of your team. Honesty, teamwork. In other words, you're not sabotaging each other's work. You're pushing each other to move ahead. Accountability, diligence, wellness. Wellness is often ignored. Communication, innovation, and helping others. Those are 8 key values. And in fact, I'm building a brokerage based on those values. Honesty, teamwork, accountability, diligence, wellness, communication, innovation, and helping others. Very important to have those values, to find those values in other people. Wellness being a key, as much key as the others. Okay? Listen carefully to your team members. As I say here, listen and ye shall know the truth. So people can hide very easily online. We all know this. You just don't know who's on the other side of the screen. Listen carefully to your team members. Are other team members talking about themselves mostly? Or are they talking about their ideas? How about you? Are you spending most of your energy comparing and talking about yourself, or do you talk about the ideas you're pursuing? People who talk about themselves are generally looking to be takers. They're providing you with a landscape of their thinking so that you can offer to fill in the gaps that they're looking to fill. They're also more interested in egoic presence, rather than a community-based presence. They're looking to satisfy, to feel good about themselves or whatever. This type of person is careful about exchanging information equitably and must take in order to give. This is a person who will make sure that for everything they've given you, that they've gotten something out of you, and will get upset if they don't. People who talk about their ideas are generally more positive and draw inspiration from those ideas. They openly share what they are doing or aspiring to do. The exchange with these people tends to be more fulfilling, hopeful, and productive. Growth in these circles happens at a more holistic level, holistic meaning happening in many, many different parts. In other words, the learning in this type of group where the people are talking about their ideas as opposed to about themselves, the learning occurs on many levels: personal, professional, communal. What's good for the group. They're always looking to inspire and so forth, and set goals and move forward and be hopeful. The drawback with this type of person or these type of people is the tendency to lose focus and spend time on non-trading pursuits that can wait until after market. So it's great to have someone who's talking about ideas, trading ideas, ways to do things, ways to do more homework, ways to inspire each other. But a lot of times the conversation just goes off on a tangent, and you start talking about things that have nothing to do with trading, and therefore you start to waste your time. So there are givers and there are takers, okay, in the people that you'll interact with in your trading journey. Communications, distractions, and lost opportunity. So trading from home versus an office. Why is trading from home not ideal? In the chat window that you have in front of you, the webinar chat window, just press 1 if you're trading from home, and press 2 if you're trading from an office, even if it's a home office. Wow. A lot of you trading from home, quite a few of you trading from an office. That's great to see. It's great to see. That's awesome. Separate office building, that's great. It varies. Okay. So trading from home is not a bad thing. I'll tell you the pitfalls of trading from home. In a home office is an office. The key element of a home office is that your trading time is separated. I'll talk about that in a bit. I'll give you an example. If you're trading from home and you happen to be sitting, your desk is occupying a portion of the living room, and your spouse is there or your kids are there, you are available. You are essentially available to your family. I traded in that environment for a period of time. My performance really suffered. It's really important for there not to be distractions. So the example of a brain surgeon. How would you feel if you had to have brain surgery, and the brain surgeon was the person who had to answer every phone call in his practice, or who had to sign for FedEx packages and so on while they're performing surgery on you? It's not the ideal situation. You want your brain surgeon or anybody who's performing anything professionally for you to put you as the key focus and to block everything else, to hire whomever or do whatever to isolate themselves so that when they are doing their job as a professional, they are doing so in a dedicated way. So trading from home is not the issue. Trading from home is not the issue. It is those people who trade from home, but then you hear conversations and you hear kids running around, and they're getting up and they're coming back down. And I've actually had conversations with traders, with our traders at S5, where I'm trying to help them out with their trading, and every 15 minutes or 10 minutes I'm being put on hold because they need to answer the phone, or they need to go and stop their dog from barking or whatever. It's obviously we cannot all be in a tall office building isolated from the rest of the world while we trade, but when you are trading, it is really important for you to just focus on that. This is your world, and I'll tell you, I'll give you some help or some clues as to how to do that. So trading in your boxers is comfy, but it's not really putting you in a mindset and in the environment to really focus on what you have to do. It's a cutthroat business. It's a very competitive business that we do. It's black and white. There's no wiggle room in trading. So it's something that you want to take on without distractions. You don't want to be ADHD when you're trading. You don't want to be multitasking and doing a bunch of stuff and being distracted and being called on and having conversations and so on while you're trading. It's very important that you focus on executing the plan that you've put together, that you've put a lot of time away from family and friends to create the night before. It's time for you to execute it. It's not time for you to sign for FedEx packages and to scurry off and get that Amazon package that you're looking to receive. So the first step in order to do that is to plan your life around your critical trading time, not the other way. Okay. So figure out what time of day is crucial for your trading plan and just block that off. It is like an appointment that you cannot break. So everything else that happens has to be scheduled around it. Yes, you may be at home and having to deal with a repair or whatever. Schedule that repair after your trading time. Once you're done with your trading time, you're no longer trading. Go take care of whatever you have to take care of. But once you're sitting at your desk and you're ready to trade, you need to focus on trading, period. Okay? The other thing you need to determine is what are your critical trading statistics? What is the good time for you to trade? What types of markets are relevant for your trading style? And just focus on those. So there are a lot of people who have day jobs and trade if they're on especially those that I've interacted with who are on Pacific time, for example, here in the U.S. They get up at 5 and trade up till 8 o'clock or 9 o'clock their time, which is 11 o'clock Central, 12 o'clock Eastern, and that's their trading time. And when discussing the markets, they tend to do their homework on the entire day. And my advice to them and to you, if you're doing that, is just pick that time and just focus on what happens during that time. It is great that you're seeing an edge in something that happens later in the day, but if you're not there to trade it and you're not able to stay in front of the computer to take advantage of it, it's not relevant to you. Just like I don't look at the overnight session. I use the overnight session to decide how the overnight action in Asia and in Europe might impact the day session or the opening time for me, but I don't watch a 24-hour chart when I trade. I can't trade during those times, and whatever information I can glean from those is carried over in my homework. So this is what I suggest you do. You just focus on those times when you are likely to be most productive and ignore whatever else is there. This is your time to perform, and it makes no sense to include a lot of other things that are on the periphery of what you can commit to the market. Size does matter. So it is really important it's also very important to limit the number of people you interact with, okay? So bonding with other traders can get very intense. If you've been in a chat room with a lot of traders, you know that the more people that come into the group, the more the dynamics change. and the more noise there may be, the more incompatibilities there are. And the example I give is the U.S. Navy SEALs, who are an elite group, have a 16-member platoon. That's the standard for the U.S. Navy. 16-member platoon, and then they split that platoon into 2 or 3 squads called a task force, and within that squad you have different people. You have shooters, you have communication person, you have people who specialize in what they're doing. The ideal team or the ideal environment for you is that compact and that tight. Size does matter. It's important not to try to interact in an environment where there are hundreds of people just all doing something, doing different things all at the same time. It is best to just focus on a small group and to make that your trading environment. Personality incompatibility disorders, like I just said, over time people tend to rub each other the wrong way, and you tend to get into areas where you start to impact each other on a personality basis. If you're sitting here reacting emotionally to something somebody said because you don't like them, then how connected are you, and how much tolerance is there left for you to be pushed, for your position to be pushed around by the market as it seeks to work itself out? So this is an area that I see people getting impacted by. So I was going to do a whole thing on minimum office space requirements, but I didn't want this to get much longer. I just want to remind you, though, that your trading space, is sacred ground. It really is. The way your monitors are set up, the information you're bringing in, the people you're interacting with, the time that you have this space to yourself, completely void of any distractions and so forth, is really sacred to who you are and what you do as a trader. This is something you want to consider if your environment is not such a thing, and if it's possible. It's not always possible, obviously. Not everyone has the luxury of going out and renting an office, but the ideal situation is that you have your space. If it's home office, it is something that you can isolate yourself in, and the people around you know that you are in your element and you need to focus for that time being, and that just to continue to do so. Other things that impact our trading environment are services like a live news squawk feed, which I use. I use several. Pit squawk, which I don't use. Those are personal opinion type things. I don't enjoy pit squawk because it just doesn't. It adds noise, but it doesn't really color my trading because I don't know what the other side of the pit trader's doing. It used to have a lot of impact, but I don't use it. But other people swear by it. You just have to try these things and see how they work for you. I use a live news squawk feed because I don't want to look at what the news feed is. I used to have a Bloomberg, and I used to look at Reuters feeds and so on and try to read what happens, but it's too much information. I'd rather hear what the news is and react to it than have to kind of remind myself to look up and look at the screen as the market's trading. Then there are also proprietary dashboards and indicators, trading algo, measuring tools, alerts, things you can buy. All of that stuff, when you bring it into your environment, it's like adding an additional ingredient to your special recipe for soup or lasagna or whatever your favorite dish is. Every time you add something, it could change the end product tremendously. So be careful when you're adding things. Excuse me. Be careful when you're adding things to your environment that these actually add value rather than just add noise. Or all of a sudden you're adding something because you've had a couple of bad trading days, so you're looking for a crutch to lean on. So you start to look around for things to buy to help with that side of it. Okay. That's all I had for you for today. I guess we can take some questions, Mike, if you're still with us.
Yeah, let's do some questions, and then after that we'll do the book giveaway. All right, guys, so what questions do you have? Let's see. Peter wants to know how many monitors you use.
So I use 4 monitors for charting and other things, and that runs on a separate computer. I've always had my charts and all of my internet access on one computer, and I use a separate computer which does not have a firewall, virus scanner, or anything, as my trading machine, which has 2 monitors, so that I can, I can have my news squawk on there and my dome. And that machine I don't surf on. I don't have any risk of bringing a
Right.
virus in or anything.
Right. No email, anything like that.
Nothing. Yeah.
Right. Lana wants to know what news squawk you prefer.
So I use 2 of them. I use Ran Squawk, which is both of these are kind of expensive. If you want more information, you can just contact me on my website here, as shown on the screen, FuturesTrader71.com, and hit the contact button. But I use Ran Squawk, and I also use ITC Markets News Squawk service. Ran Squawk is something that I'm dropping. It's just very expensive, and it doesn't offer anything that's special. There's also, Trade the News and so forth, but I felt that I was paying for all these things and I didn't really need them. But the key one I rely on is ITC Markets.
Okay. Kurt asking if you have any more info, or maybe he's asking like for book recommendations, or his actual question is best info on meditation. So any recommendations?
Okay, yeah, I get that a lot. I get that a lot. I think that the best recommendation as far as a book is one, you might want to just search for it on Amazon. It's called Mindfulness. It's by John Kabat-Zinn. You can get the audio of it, but really, as far as meditation is concerned, meditation occurs on many levels. I mean, essentially, every time, if you're a spiritual person, if you're religious or spiritual, every time you pray, it's meant to be a meditation. It's meant to be you in silence. You can meditate while you garden, actually, as long as there are no thoughts in your mind and you're completely relaxed. That's a meditation. There's a vast world out there on meditation. Kurt, I would really encourage you to just get a hold of me through my website, and I'll respond back with links to various websites and resources that you can look at. But this is something that will enhance your life, I think, almost with a guarantee.
I think it has the potential to be a future webinar, actually, if you're up to it. It's an important
It's a vast subject.
Yeah.
Yeah, it is. It is. It's a life changer.
Jim wants to know how you deal with boredom when markets are very slow.
So I used to have this issue before I got into this brokerage side of things. Now I can't get a breather, but what I used to do is just walk away. So exercise seems like such a daunting thing to start. Oh man, I got to get on a treadmill and then start running, and it hurts. But when the market slows down during those lunch hours, it is just a fantastic time to go and take care of whatever you need to take care of and give your mind a break. Your mind, as you've probably read, if you've read Power of Habits, has an elastic ability to get strong at whatever you put your attention on. But also there's a tolerance limit to everything that we do. There's a tolerance limit to our discipline. This has been done through experiments where they put put cookies in front of people that just went through a very, very difficult test and tell them not to touch those cookies. And those people who had the hardest time tend to lose control and kind of reach out and actually eat those cookies, things like that. So there's a tolerance, there's a limit to how far you can push things. And so breaking up your day is a great way. And I tell you, exercise, even in the form of just going out and walking, fast walking, for about 15 minutes will change the way your mind works. Again, I suggest you look at Spark, a book named Spark, for information on that. But that's how you beat boredom. You just plan your day around it. You look at You look at here's the time frame that I'm going to trade in. My results or my statistics are poor from 12 o'clock Eastern onwards, and so my plan is to come in at 8 in the morning Eastern, trade till 12, and then go away until 3 o'clock. And so now from 12 till 3, I can take care of myself. I can do things for myself. I can work out. I can take care of my chores or whatever. I don't sit in front of the computer if I'm not going to trade. I don't sit here and watch the market, because when things do happen, I find that I have very little tolerance to miss a trade. For example, if I've been sitting here for hours waiting for something to happen and suddenly the market moves up 5, 6 handles, then I find myself trying to sell that move because I've been sitting here and I've gotten nothing in return for my time, and here's the move that I've been waiting for and I didn't take advantage of it. The fact is that move is not my move. Right. I don't have a plan for it, and so I just go and do something else.
Dale wants to know how many markets you trade at one time, and I kind of want to modify that question a little bit and ask you, how can each individual person determine for themselves whether or not they should trade one market or when they're ready to trade more than one market?
So I'll tell you my experience firsthand with this. When we used to scalp momentum, you had to watch 5 or 6 markets at the same time, and all you're doing is scalping the difference between those markets. That is not a sustainable edge. It doesn't exist anymore. It was wiped away with high-frequency trading and arbitrage. What I've seen as someone who's watching risk all day long is that those traders who come in and trade multiple products tend to do worse. I have yet to see an online trader who's trading more than one product that is experiencing any kind of consistency. The goal here is to become a master at something, at one thing. That's not possible for you to do as a stock trader, I understand, but you can do that for an industry. If you're someone who, God forbid, loves to trade biotechs, for example, then stick to that sector and understand how the FDA reports impact those stocks and so on. Stick to that sector as a trader. If you're someone who's trading futures and you understand energy, maybe you have a background in the energy industry or something, then stick to energy, trade QM or CL or whatever, but stick to that market. Just stick to one thing and get really good at it. The progression of a trader goes like this. It goes from being inconsistent, trading one lots in some market, usually the ES, it's the most popular market that people like to learn on, although I don't think it's the greatest market to learn on. Then the next progression is not, let me look at the ES, NQ, TF, and others, and YM. The next progression is, how do I improve my expectancy by adding a second lot and managing risk that way? Then the next progression should be, how do I extend my targets and get better expectancy? Once I have that better expectancy, then I'm going to add a third contract and do better. And the idea is that you're getting a return for your effort through larger size. What most people do in contrast, though, is that they start to see some success with a product, and so they decide to add another one with a one lot, as opposed to just sticking with the one and just starting to multiply their risk-reward ratio in their favor. Moving from ES to NQ, trading the ES, then NQ, or at the same time, you're trading two products that are somewhat correlated, but they are two different products. I would rather become really, really good at one than to be okay at many. This is a lot like learning how to do a sport, becoming really good at it, and then going and doing a second sport. Michael Jordan tried that, the best basketball player of all time. He went and played for the Chicago White Sox, which is a baseball team. He was awful at baseball, and it's the same thing with trading. Stick to something. If that something doesn't work for you, by all means, move on to something else, then stick to that other thing until you find your product. It's a lot like dating. You kind of have to go through a bunch to figure out what works for you and what doesn't. And each one of them teaches you something a little bit better. But don't trade more than one product at the same time. That is maybe step 8 or 9 down the line. But you know, it's something you want to manage over time. You want to stick to what you're doing and then grow that, as opposed to moving on and going through a new learning curve and picking up a new tool and changing your method and all of that all the time, because what you're doing is you're putting yourself through a perpetual learning curve.
Right. Let's see. Rex asks or says that previously that you had mentioned that you have a bunch of Post-it notes around your monitors. Would you mind sharing what's on them, and what do you think about those as part of your environment?
So I don't have those anymore. I don't have those anymore because I've practically memorized them, and I come into people come into meetings and stuff, and I have to explain what they are every time, so I took them off. But one of the key Post-it that I had that was really important, that I wrote in a thin pen that later I thickened with a permanent marker, was wait for the market to come to you. Wait for the market to come to you. I create these hypotheses for anyone that wants to know what that is. I do these YouTube videos at 9 o'clock Eastern every morning. You will get the link from my Twitter feed. And I have a plan for the day. And that plan was done in the best environment possible. I'm calm, I'm objective, and I'm looking at the market for what it is as it is. And so I formulate that plan. My job, once the market opens, is to sit here and think and try to figure out, with early clues and using various tools, which one of these plans is the market's likely to execute today. What is it doing right now? And then I align my trades with that plan. I'm okay if it doesn't do my #1 plan and it skips to my 3rd, then it goes to my 1st, then it does my 2nd. I don't really care. My goal is to wait, to identify which one it is, identify a trade location that is in my favor, put on the trade, and that's it. That's the job in a nutshell. So that was a very, very important Post-it, to just wait for the market to come to me.
Right.
Because going from a high-volume scalping environment to what I'm doing now was extremely difficult. I was very active as a trader, as a futures trader, thousands of round turns per day, to sitting here and just picking off 5 or 6 trades a day. I just got to the point where I started to realize that I just needed to wait, and that was the most important one.
Right. Rob wants to know how you started thinking in probabilities instead of worrying about the very next trade.
So I don't worry about anything that that is not confronting me right now. It's kind of a very tiresome use of energy. The very next trade has no bearing on my current trade, and my current trade has no bearing on the very next trade. They are each discrete and on their own. So thinking in probabilities basically came down to, actually I learned to think in probabilities best, I think, when I started to work on trading systems. That's when I started to realize that the only thing that the machine does better than I is that it is executing some probability consistently without any attachment. And then I started to realize that there are a lot of probabilities that change throughout the day as the market unfolds, and so they're not something I can program into a computer. It's not my style. And so what I started to do is look for discrete or individual probabilities of certain behaviors. For example, like that Big Mike webinar I did, where I showed that the overnight high or low, what I call the overnight stat, the overnight high or low is taken out 98% of the time during the day session. And once you get that, once you distill that stat, then you start to look at, okay, when does it generally get taken out? Does it get taken out in the first hour, or which time slot of the day? And then you get a second stat, and you get a third stat, and you start to look at IB ranges, and you start to look at certain behaviors in the market. What is the probability that the market will close? A 7-point gap. It's 24%. Okay, so with those discrete probabilities, I read context, and then I almost rule of thumb apply those statistics. So I cannot tell you at any given time what is the probability of something happening over another, given all of the action that is taking place. But I understand, given those homework or research stats, how things may play out more so than another. I know that's a confusing topic or a confusing way to explain it, but that's how it works. And seeing that unfold day in, day out, that's how it basically instilled in me the idea that I just need to focus on probabilities, because in the end, the outcome of every trade is 50-50. It's the probabilities that play out into an edge over time.
Right. Najib has an interesting question. There's a thread on BMT that's been going on for a number of years. I can't remember the exact title, but it's basically about trading and how it affects your family, like whether or not your spouse supports your trading, or if it's like a constant battle, especially if you're losing money, or even the kids. Kids can have the influence too. So he's asking,
oh, man.
he's asking, what are your thoughts on having your spouse as your auditor, as your trade auditor, versus someone who's just another trader? And he says he often wonders about explaining his trades to his wife and whether or not it would help him or if it would negatively affect his psychology.
Okay, so I'm going to try to be sensitive to the fact that you're talking about your wife, but I would say that trading, at least in my career, trading has always been looked at as a pastime or a hobby by those people who are not in the business. So let's talk about something that's related. Professional poker players. Professional poker players are a bunch of people who range from people who are looking for entertainment, to those who are addicts, to those who are absolute professionals. And just like in trading, those who take this on as a profession are limited in number, but make a handsome living at it, probably. And going to a party where you run into someone who says, you know, hey, yeah, I'm a professional poker player, your instinct is to say, well, that's not really a career, that's a joke. To someone who does not understand what you have to go through as a trader or how this business works, it's difficult to get that support. So it's just, to Najib, it's a function of your wife. You know, if your wife understands trading, so we have a lot of traders in our group who trade with their wives. Their wife acts as this psychological support mechanism for a lot of these guys. In fact, many of them, the wives outperform the husbands, and it's in that situation you have something that is supportive of your career choice. However, in most cases that I've run into, generally you want to keep this to yourself, and you want to create a group of people who are doing this. Your wife may be sympathetic to the idea that you've had another rough day and things aren't going well and you feel like you should have made the turn by now, but nothing's going your way, and so on. But eventually what will happen is your wife will say, okay, get a job. You know, this is not working. But if she's someone who understands what's required to do this and to perform in this endeavor, whether you win or lose doesn't matter, but if she understands what's required, there's a tendency to get free therapy or to get some support that allows you, or encouragement that allows you to keep pursuing what you want to do, and I think improves your chances. That's my opinion. But if it's someone who's going to criticize the fact that you just don't want to go out and get a job or whatever, then that's not something that's going to help you along. And it's going to be the same in whatever whatever performance career that you choose to do. If you want it to be a professional golfer, it's going to be the same. It's going to look like you just go out there with your friends for 8 hours a day and follow a ball around a golf course and drink beer all day. Then you're not getting the support that you want. But if it's understood that this is a career choice, and there's money in it, and there is some fulfillment in it, then you're gonna get the support that you need, and in that case, it's positive. Kids, on the other hand, I had my first child when I was battling to make the turn. Kids make it more difficult. It makes it more challenging, and it's again a topic that was covered in The Power of Habit. It reduces your tolerance. Your emotional tolerance to trading. You know, if you're tired and your kid just requires a lot of care, which they all do at the beginning, and essentially your fuse is a lot shorter, and it's easy to get emotional in the trades that you take. Getting emotional in trading is really an Achilles heel. It's a trader killer to get emotional in trading, and so having to deal with a child that's sick or having responsibilities outside of trading that demand your attention and will reduce your tolerance for trading, for the discipline that you require as a trader, is a net negative for you. Unless you create a plan for that, it's very, very important for you to come, as I said, to come to trading completely centered and focused. You're going up against the best of the best, and so you need to be coming from a frame of mind where your family relationships are great, that you're not mourning the loss of a loved one, that you didn't just get bad news, and that you didn't stay up all night and party and so on and are exhausted, and here you are interacting with the market and using leverage to do so. Okay?
All right. Roberto asking, how do you recognize during the day that you're not trading to your full potential, or if you're having a problem trading well that day, and what do you do in that situation?
So, good question. That's where your risk plan kicks in. I know that. So the probability for me to take 3 losses in a row, the probability for anyone to take 3 losses in a row is very low. It's 0.5 times 0.5 times 0.5, right? So that's what is that? Whatever that is, 12.5% or something. The fact that I'm taking trades and my read on the market is such that I am taking one loss after another, that's telling me that I need to back off. The only way I know that this is the time for me to stop is that. It's more of a long, big database of trades and how I've performed, and when I see that I'm deviating from my performance metrics, then I know, okay, I need to stop. And so my risk plan actually goes through phases. I have to cut size at a certain percentage of losses, maximum loss, then I have to cut size more so that by the time I'm getting close to my daily loss limit, I'm essentially trading the smallest size possible. And the goal here is to continue to take what you perceive to be an edge, but not to do so in a crazy way, in a let me hold this or add to this bad trade type of way. There is no other way to know. It's like asking, how do you know when your automated trading system is no longer has an edge? You don't know until the system's metrics fall way outside of the parameters you've set out, which you expect never to happen with that system. But other than that, it's hard to self-diagnose while you're trading and you're in the heat of battle. It's hard to tell when you're not doing well and should stop. So for me, I just have full faith in my risk plan, and a lot of times I can tell when I'm not doing things the way I normally want to, and it's an experiential thing. It's something that comes from experience as well.
Okay. Just a couple more questions here due to time. So I'm trying to pick the ones that I think are most relevant to most people. Vaughn asking if you could talk about taking stops. He says it's a real problem for him and for a lot of people.
Ask the question again. It's taking stops?
Taking stops. He says it's a real big problem for him, as it is for a lot of people. You know,
Okay.
they move stops and move them, right? So.
Okay. So as part of my learning process when I was fighting to make the turn, one of the things that I had to do, that everybody did, was to write an agreement with myself. If I violate my daily loss limit, in other words, my daily loss limit has happened, most professional platforms do not have auto liquidate, so you had to take yourself out. If I violated that limit, I had to sit out the next day. I hated sitting out the next day. So I did everything I could not to violate that loss limit. It's also embarrassing to come in and see that everybody else is trading or other people are acting in the market and you're just sitting there, assuming you have the discipline to follow your plan. The issue, you have to, in order to try to remedy an issue, you have to understand its source. You cannot solve a problem at the level of the problem. You have to kind of dig beneath it. The reason it is hard for people, in my experience and opinion, to take a loss is because they have decided before taking the trade, they have decided that that trade must work. In other words, they do not have faith. They do not believe and do not trust that the next trade's outcome is absolutely unknowable and is unknown. If I don't know what the outcome of this trade is going to be, then there's nothing I can do. Once I put on the trade, there's nothing I can do but take a loss. Or it goes my way and I get my target and I manage my risk. But if you're taking a trade and you're just having a hard time taking a loss, it's because you did not put that trade on because there was an edge. You put that trade on because you have convinced yourself, whether you know it or not. We are amazing. Human beings are amazing at tricking ourselves. Whether you know it or not, you have not put on that trade unless you have fully convinced yourself that it has to work. And so when it doesn't, you are holding on to the idea of being right and making it work, so you give it more room and more room and more room. Heck, if I bought it here and it came down here, then isn't this a level where I would have bought it anyway, so I might as well just hold on, or better yet, add another lot, to this trade. But the source of this problem is that you are not accepting that losing is part of this. If I did not take losses on a regular basis, then I'm lying to you. If you ask me, hey, do you take losses on a daily basis, and I say never, then I'm a liar. I'm not a trader. I'm a liar. Because losses are just a part of this. Just like you have to exhale carbon dioxide to take in more fresh air so your cells can live on. The exhale part is a loss. In trading. The inhale part is when things go well, and they go together. It's something that happens all the time. You're just looking for the gains to overcome the losses over a large sample of trades. But you as an individual, the next trade you put on, as perfect as the conditions are, as great as that trade is, and as many times as it has worked for the last 100 years, that trade can still be a loser. Even if it has a 99% historic probability of winning, the 1% could happen in this trade, or the 1% could turn into 2% or 10% because the trades are flowing continuously. It's not a closed data set. So unless and until you accept that losing is just part of the game. And for me, a loss that I've held on to just makes me feel dumb. It just makes me feel like an idiot, because I'm holding on to something that if I had just detached myself from it and just taken the loss, it would have given me an opportunity to at least go the other way. A loss tells me a lot. It tells me that what I had intended as a plan, the market did not agree with. If it did not agree with that, then all I have to do is wait and look the other way to try to catch something in the other direction. I don't always do it, but it gives me the opportunity. As long as I have a trade on, and I've been doing this professionally for a long time, I still suffer from the problem of once I'm in a trade, I do not see the market for what it is as clearly as I do when I'm not in a trade. It's just something happens in my mind, and I'm aware of this, where I don't see things for what they are. So when things don't work, I just get out. If I put on 2 units when I meant to put one on, I get out. I get out of the extra unit. I go back to what my plan is. And this has happened to pretty much everyone I know. Think of the times when you lose and then you go away and the next day you look at the chart and you think, the first thought that comes to mind is, what was I thinking? I did the exact opposite of what I said that I would do. What was I thinking not to see this huge part of what the market was telling me? How did I not see that? Why? Because the mind that is operating when you have risk on and you're in danger is not the same as the part that operates when you are calm. That is why I do my plan before the market. My job during the market is to execute. The trade didn't work, take the loss. I don't care. Take the loss. And if you don't, and you keep track of those losses, so another aspect to this, just to make sure it's a complete message, another aspect of this, you're probably not tracking those losses. Because if you track those losses, you would see that they are ridiculous. that the instance of a loss going way against you and then coming back to pay you is probably 1 in 100. It is a probability that you wouldn't bet on. You have better odds in a slot machine. So if you kept track of those losses and how they've harmed you and added up the number of times you committed those errors, you would see that it's just completely idiotic to continue to do so. So take the loss and just go the other way. Clear your mind. Every time you're flat, just remember the mind that you're operating with as a trader who's flat a position is different than the mind operating when there is danger. Once you reach a stage of development where you don't feel danger in trading, then your mind is able to be intuitive and objective, and you've basically arrived at that point.
Right. And as you were saying that, I couldn't help but think about the importance of having a journal. And, you know, BMT is 5 years old this month, and I know people are probably really tired of me talking about how important journals are, but man, I can't think of really anything else that is more important. And, you know, to your point of tracking, if there's a spreadsheet that I started with, and then the other users made it 1,000 times better. It's on the forum. You can do a search. I think the title of the thread is Trading Metrics, and it's a really great Excel spreadsheet and lets you do something really simple, like just categorize a trade, like what type of trade it is. So, for example, you could put on there that you didn't follow your stop or that you added to a loser or whatever. Then it'll break out statistics on those types of trades, and you can see, you know, right in front of you how much those are killing your account. Of course, but you have to be honest with yourself, and you have to do the journal. And it seems like most people really can't even get those two things done. But anyway.
Yeah, it's definitely a battle, but you know what? Just like talking about spiritual things or religion or whatever, people can't hear certain things until they're ready. Yep. And a lot of times it takes a while for people to be ready to accept what is in front of them. I still get emails saying, you know what I figured out today? I figured out XYZ. And I'm like, dude, here's a link for something I talked about in 2009 where I was telling you that exact same thing.
Yep.
It's just when people are ready, they'll get it done. Hopefully they won't be out of money by then.
Yep. Completely agree. And, you know, one last point on the journals, because I love talking about journals, and there's, you know, thousands of them on BMT. There's hundreds of them that are active on any given day. And what's really remarkable is that, okay, so here's a person that's taken the time to actually create this public journal. So they're doing a great job. They're already way ahead of the curve. They're posting charts. They're posting trades. They're holding themselves accountable. Okay, but even with all that they've accomplished, they still sometimes, not always, but many of them still don't review what they've written. And it's almost like it's obvious to me as the reader, or it's obvious to Bob and Joe or whoever else is reading the journal. You're like, man, I can see exactly what this guy's problem is because he keeps making the same mistake over and over and over again. But
Yes.
the guy creating the journal doesn't even realize it. It's oblivious to him because he hasn't reviewed what he's doing, you know. So
yeah, and you know what, Mike, this is a great point. Probably a whole other webinar, but I've been pushing at stage 5. I've been pushing our traders to journal in Evernote, and there's an explosion of people producing their journals on Evernote now, and you can use OneNote, and there's a whole bunch of programs you can do this with. And the advantage is just what you're talking about, is doing the journal in the heat of the moment. There are some great examples on the hashtag FT71 thread if you go through it. And people do their journal, and what happens is they kind of journal and just let it be for the week, and then come back on Sunday and just go through those 5 previous days, trading days journals, and the notes that I've gotten about those journals are outstanding. Things like, how in the world, like, whose journal is this? Like, this is not me. And it's really outstanding when you start to step away from the heat of the moment and look at what you did during trading, and then look at it again from a calm, state of mind. It's just amazing how people experientially recognize that, yeah, it's true. I am not who I think I am when I'm in the middle of trading. I lose my mind somewhat. And there's a lot of documentation on this with athletes, high-performance athletes and so forth. Same thing, except athletes, their journal is on ESPN. You know, like, the world talks about what they did wrong, so they can't escape it. But it's so important to do it electronically as opposed to what I used to do, which is to print a chart and then write notes on it and put it in a binder. It's great because you can go back and do a find and look for the word error and see how many days, how many journals that word came in and how often it happens, and just cycle through. It's really a great way to self-coach.
right. Absolutely. Okay, so I see that there's a lot of questions left, but we're over an hour and a half, so a couple things before we give away the 10 books. First, I'm going to ask for your BMT username if you're one of the guys, one of the 10 people that wins the book, so please have that ready, okay? Second, FT has done, I don't even know how many webinars, a lot of webinars on BMT, and he's done even more AMAs, okay? So if you enjoyed this part of the Q&A as much as I do, I love this stuff, then you should definitely go check out all those webinars and AMAs because it's full of this type of stuff. And if you didn't get your question answered, there's going to be another AMA in a couple weeks, and make sure you attend because that's all we do is answer questions. Okay. So with that, FT, are you ready to give away some books?
Yeah.
All right,
it's
let's
your
do
money.
it. let's do it. We got 10
right,
books, 10 books, and yeah, hopefully you're paying attention. I think you gave them a lot of hints, so I think we're going to have a lot of responses.
I want these books to be given away. The first answer gets it, right?
Yeah, I mean,
the first person with the right answer gets the book.
Well, we have enough people here. I think that what we can do instead is book number 1 is the first correct answer. Book number 2 is the second correct answer. By the time we get to book number 10, we're going to look for the 10th correct answer, and that way it doesn't matter how slow you are at typing, how fast you are. Everybody, it's all even.
Gotcha.
It's all random. Right?
Oh, awesome.
So let's do that.
Okay. So the first question, name one of the 8 values listed that you need to find in your team members. Name one of the 8 values. There you go, honesty.
Man, this is amazing. It's amazing because people have, like, I can tell they like have a little notepad open and they like cut and paste, a 10-word answer.
Holy cow! Yeah, look at some of these answers. People have typed like a huge thing.
Yeah.
All
right. So
it looks like Greg Wilkes was the first one on this one, right?
Yeah. Okay. All right, so read the answer for us. And Greg, I need your BMT username, please. Greg
So
Wicks.
Greg put down, in about 5 milliseconds somehow, Greg was able to type wellness, diligence, honesty, teamwork, accountability, ingenuity, and community.
Yeah, he had it ready to go. He's cutting and pasting. People are pretty smart when it comes to these books. They take notes and then they cut and paste.
They're traders. They need to be smart.
All right, book 2.
All right. Name one of the downsides mentioned of trading as a prop trader. Name one of the downsides mentioned of trading as a prop trader.
Looking for the second correct answer.
So looks like Josh Jones for this one. Profit split.
Okay, Josh.
First answer was actually Rex, but this is book number 2, so it goes to Josh.
Yep. Got to try to keep it fair. Josh, I need your BMT username.
The third question, when you're ready.
Yeah, go ahead.
The third question is, name one of the key upsides to being a prop trader.
So looking for the third answer as hundreds of them fly by.
Yeah. Key upside to being a prop trader. So the third answer, okay, I can, risk of, so it would be upside. I don't see, so would that be Najib? Yeah, I think it's Najib.
Okay, I'm not finding it on my window. There's so many answers. Just read us the answer, and Najib, I need your username, please.
He wrote high buying power, performance awareness, risk management, team environment, solid infrastructure, access to others, and experience or advice. All good answers. That's Najib.
You got to come prepared if you want to win a book on BMT.
Holy cow! Yeah. Man, right. I think rather than compete with these guys, I'll spend the $12. Number 4, in your team members, there are 2 types of participants that you should listen carefully to discover. What are they? 2 types of participants.
Looking for number 4. Number 4.
Number 4, I'm trying to find. Okay, number 4. So we've got 1, 2, 3, 4. That would be Guardian.
All right.
Guardian.
Need your username, please.
Tiger.
And what was the answer?
The answer is givers and takers.
All right. Just waiting for his username, but while we do that, let's go ahead to go to book number 5.
So this is a little bit more vague of an answer, but here's the question. What is recommended that you do during trading hours? What is recommended that you do during trading hours as part of your environment, as part of improving your environment? So let me look at the answers. Survey says looks like, wow, gosh, these guys are so quick. So it looks like Joe, I don't want to say someone's last name, they may not want to be. So Joe wrote focus, meaning basically isolate trading as the only thing you do. Joe F. Last name starts with an F, yeah.
Right. Yeah, needs your username, please. Yeah, I always say the last initial if I can, because otherwise I get all kinds of private messages later saying, hey, you said that I was the winner, because there's like 10 people in here with the name Joe probably, so. All right, book 6.
Okay, book 6, how can you ensure that your critical trading time is honored? How can you ensure that your critical trading time is honored? So we're at 513. Oh, man. Okay, so we're looking for number 5, right?
6. Number 6.
6. Okay, so 1, 2, 3, 4, 5, 6. So it'll be BP. His answer is carve it out, which basically is the same answer. You plan everything else around it.
All right, BP, I need your username, or that might be it that you just gave me. All right, and so book number 7.
Book number 7, this is a piece of cake. The more people you add, true or false, the more people you add to the group, the better the quality of the information and the ability to hone in on your edge. This is too easy.
Yeah, seventh one here.
7th. So the 7th correct answer is 1, 2, 3, 4, 5, 6, 7. Warren H.
All right, sorry about the dogs. Warren, I need your username. And what was it? It's false, right?
Yeah, it's false. Adding people is usually not a good thing.
All right, book number 8.
Name one of the key habits to becoming a great at a professional pursuit. Name one of the key habits to becoming great at a professional pursuit. So I named a bunch of habits. Name one of them.
We got people that named all of them.
Okay, so we're looking for number 8.
Right.
So let's see. 1, 2, 3, 4, 5, 6, 7, 8. JR. Gosh, he just copied pasted his notes, I guess.
All right.
JR wrote, being supremely patient, ability to act when the defined probability shows up to your favor, understand that losses are part of the game, operate from a centered frame of mind, be calm and detached, exercise, see book Spark, meditation, look at Bloomberg articles, search meditation, position sizing, understanding risk reward, cut distractions and errors, consistently track results. And he pretty much hit all of them.
Okay, JR, is that your username? I think you're telling me that's your username. If not, type it again. All right, so book number 9.
Book number 9, guess what? Same question. Name another key habit. JR ruined it.
You can win 1 book per webinar, guys, just so you know. You can't paste that answer again. All right, so you're looking for the 9th one, and man, they're just flying by my screen here.
Yeah, I see. So I see 1, 2, 3, 4, 5, 6, 7, 8, 9. Matt R.
All right, Matt, I need your username. And what was the answer? Or what did he write?
Yeah, Matt R. wrote, operate from a centered frame of mind.
Okay.
That was one of the key habits.
All right, so final book, number 10.
And then number 10 is, and this is a tough one, I'm giving you a lot of chances here, name a final key habit again. So they've been listed, name one more. Oh, cow, okay. So I'm marking where we stopped last time.
Yep.
All right, so it looks like this is number 10. I'm just trying to scroll down here. Number 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Greg B.
All right, Greg, I need your username. And he says practice, right?
He says practice.
All right. Okay, there's his username. All right, guys, I'm going to contact you in just a few minutes, and I'll get your mailing address and all that, and I'll ask you if you have any autograph requests for Morad, and he'll sign the books. And since I'm now living in Ecuador, he is going to do me a favor, and he'll mail the books out to you guys.
Mm-hmm.
So look for that here in the next few minutes. All right, guys, so FT, as always, I appreciate your time, and I look forward to the next webinar and see what you guys come up with, and more Q&A, and another AMA, and all that.
Thanks for having me on. And for anybody, I know there are a lot of questions that weren't answered. I would go to that AMA thread and ask there. If you need anything special that you don't want to put in a public forum, I welcome any questions relating to trading. You can reach me at FuturesTrader71.com/contact, and I'll try to help you to the best of my abilities. Mike, thanks for having me on as always and making me a part of this this annual celebratory thing you do every year. I appreciate
Absolutely.
that.
Absolutely.
Thanks so much.
Thanks, guys. See you on the site. Bye.